And here's a look at how the stock market ended up closing today. Everything's moving in the up direction, which is good news. The Dow Jones is up 75 points, the NASDAQ up as well, and the S&P 500. You know, the stock market has been rallying for the past few days. So what does this mean anyway for the economy and your money, more importantly? Philip Streng is a financial advisor with Edward Jones. It slipped my mind. So tell me, what can we gather with the numbers that we're seeing? You know, it's on the rise. What does that mean? Can we draw any conclusions?
Nice to see the day start off with strong earnings reported, for better than expected from both Intel and JP Chase. Those things here in the short run are sure making us all feel a lot better.
Yeah.
Unfortunately, though, the stock market and the economy don't always dance the tango. So sometimes it can give a little bit of a maybe be a little bit misleading at times.
Okay.
We're liking what we see, but there's no guarantee necessarily of what tomorrow may bring.
So this isn't necessarily a possibility that we could be coming out of this recession? What do you think?
That'd be great. That'd be great.
Really
and I think we all would like that. It'd be great for those students at GVSU who are at the job fair today.
Yes.
To land some jobs as a result. But unfortunately, one day does not necessarily make a bull market. Yes, the past few days, past couple weeks have been looking real good. I think it still comes back to the core principles of how people need to invest, that's for sure.
Let's talk more about that. What is your advice to investors at this point?
Well, depending on the investor, obviously it's an individual basis, but really continuing to stay with high-quality stocks, well-diversified portfolios, having some both domestically as well as internationally, and really continuing to focus on the long run, focusing on what the purpose of those investments is, rather than just the day-to-day fluctuations.
What's your advice to people who may be a little bit nervous about getting back into investing?
Very understandable. For folks in those situations, maybe considering doing something along the lines of dollar cost averaging, similar to what probably you and I do with our 401ks, a little bit each month going in.
Okay. So can we draw anything from the numbers that we're seeing in the market to historically, for instance, or is it just we'll have to wait and see?
Well, you know, the market tends to be a precursor 6 to 12 months ahead of what the economy. But again, there's no guarantee necessarily of that. So I think it really just comes back to those principles. Let's not get overly excited whether the market's up 100, down 100 in any one day, but really continue to come back to the core of what you own and why you own it.
Okay. Philip Streng from Edward Jones, thank you so much for joining us. We can only hope that we're coming out of this recession.
Good to be.
Thank you.
Thank you.